Hi, good afternoon. Our team is conformed by Liliana, Espinoza, Baltazar, Ricardo, Carrera, Centeno, and José Francisco Torres. We will expose a work about the investment evaluation for machinery of a printing and sublimation business. The net present value, or NPV, is the difference between present value of cash inflows and present value of cash outflows over a period of time, of course. It's used in capital budgeting and investment planning to analyze the profitability of a project. People also use it to calculate current total value of future stream of payments. If it's positive, it means that the discounted present values of all future cash flows related to the investment will be positive, which means attractive and worthy of pursuing. To calculate the NPV, it is necessary to estimate future cash flows for each period and determine the discount rate. The internal rate of return, IRR, is a metric used to estimate the profitability of a potential investment. IRR is a discount rate that makes the net present value, or NPV of course, of all cash flows equals to zero in a discounted cash flow analysis. The main objective and direction of the research is to find the best investment option for a small printing business in order to obtain the most optimal benefits. Now, the problem. The owner of the RGB advertising and printing business has available capital that he wishes to invest to expand his business. You have three options. The first one is an Epson SureColor P957044 plotter printer, color injection print, which will allow you to optimize your large scale orders and some other stuff. The second option is a Race Pro 2 3D printer that you will use to offer new services and be of the few small businesses that have a printer of this caliber. And the last option, but not least, is the BizHub C300i printer, copier and scanner that will help you reduce waiting times and increase normal copy of print orders. It is known that the total amount of investment for own resources is $100,000. The price of each printer is greater than this amount, of course, but the owner is willing to request a loan with an interest rate of 12%, which allows him to liquidate the product. The main objective of this project is to evaluate the options through the net present value and the internal rate of return, which is the IRR, in order to identify the option that brings the greatest benefits to the business.
So now let's talk about the literature review and the method. For the method, the first step was to calculate the cost of the discount rate. For this, it was taken into account that the discount rate was the sum of the weighted average cost of capital plus an associated risk premium plus the inflation rate calculated in April by the Mexican government. Also, it's important to say that for the weighted average cost of capital, a tax was not considered for part of the cost of the debt. It's important to mention that the cost of the capital was taken at the rate that the owner would have obtained if he decided to use his money to invest in a bond of the government, such as CETES. The next step was to calculate the net present value of each of the printers with the help of Excel. For this, we require the initial investment represented by the cost of the printers, also the annual benefit that the owner of the company calculated that he could obtain, also the discount rate previously calculated in the first step, and the period of time was also granted by the owner, who took into account the years in which the equipment could continue to operate. And finally, the last step was to calculate the internal rate, which was calculated with the help also of Excel, in which we only need the cash flows of each year and the investment. So now let's talk about the results. So we found the discount rate for the first printer was 19.3%, For the 3D printer Race Pro 2, we found that the discount rate was 19.9%. Then for the last printer, the discount rate that we obtained was 18.3%. So now about the net present value, we obtained the following results. For the first print, we found that the NPV was 21,823.42, and for the 3D printer Race Pro 2 was 45,832.85, and for the last printer, the NPV was only 277.40. And finally, about the internal rate of return, we found that for the first printer was 24%, for the second printer was 37%, and for the last printer was 18%.
Discussion. After analyzing the results, we can say that the discount rate is widely used to evaluate projects and can be defined as the cost of a capital that is applied to determine the present value of a future payment. However, as we could see in the results, it is necessary to calculate the net present value that helps us to calculate in first place if the investment are feasible. Secondly, to see which investment is better than another, and thus be able to make a good decision when investing. Another important calculation is the internal rate of return, since it is a measure used in the evaluation of investment projects to verify the viability of an investment. Allows you to compare investment between them. The higher IRR, the better investment. Once the result of these three calculations are compared and analyzed, a decision can be made and those obtain the greatest profit for the company. Conclusion. To conclude this investigation, it is possible to affirm that the objective of finding the most profitable and efficient printer through the net present value and the internal rate of return was fulfilled. As can be seen, the Race Pro 2 3D printer has both the highest net present value and the highest internal rate of return amongst the three options, in order that in the future, more concepts can be analyzed to achieve more optimal results in a market study. It is advisable to add certain methods seen in the class to study most of the product, and thus be able to be safer when taking decisions like the one made in this work. Taking this into account and giving an end to this investigation, it is valid to say that the methods applied for taking results were effective and meets the objective and goals, since an analysis of three products could be made to find the best investment a small printing business can make.